Hey, what is up everyone, and welcome back to another video. Today we're taking a look at Ethereum, which is currently up 5% from its massive crash yesterday. We're going to be taking a look at its ETF inflows, outflows. We're going to be taking a look at its liquidation heat map, its technical analysis, and any news behind it. But before we jump into all of that, I want to ask you guys to check out the Discord down below. Inside you can copy our trades, our learning resources. You can even copy my strategy so that you can trade for yourself. It's great for new and advanced traders. So yeah, make sure you join up, check it out, and start mastering the markets. Now back to Ethereum. So yesterday and just really throughout last week, we were sat on the support right here at 2.1k, which we're currently at right now, but we were sat above it, you know, consolidating, getting a few accumulations in. We had one wick on Tuesday here, which dipped slightly below, nearly to sub 2k. I think it was, you know, very minimal, but still after that we were able to slightly climb up and now have since dipped down. We actually hit just under 2k yesterday and again opened at that today. So it's not been the best of weekends for the entire market. You know, Bitcoin down to 83k, really just standing on nothing right now. So it's not been the best. You know, where could ETH go if the market continues to dip like this? Probably to 1.8k. and same with Bitcoin. You know, we still have a long way to go down to 74. It's going to be like a 10% dip to the next support areas right here at 74, 68, 69k. So there is still a bit of dipping potential. You know, you'll remember in a few videos we talked about accumulations really anywhere, you know, in this entire vicinity for ETH, and I still stand by that. I think it's still a great area to be DCAing in at. You know, if we just target the previous highs that we had last year in 2024, the end, you know, it's still going to be a 2x from the current area we're at right now. So it's still overall a really good area to DCA at. The second area I'd look to DCA at is going to be like 1.8k, 1.85k, maybe even 1.5, 1.6k right here. So there's a lot of areas for us to DCA at, and one thing I preface in all videos is to always have capital efficiency, and what that is essentially having enough capital to, you know, disperse at each individual level, and not only to disperse at each individual level but also to be able to disperse more at each lower level. So if you enter with, you know, let's say $10,000 at 2.1k, you'd want to enter in that with like $15,000 at 1.8k, maybe then 25,000 at 1.5k. That way your average entry is going to be so much lower rather than you entering with 10k, 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 and you'll also be able to get exposed more to the position, so that when we do climb and hit, you know, a 2.5x, 2.6x, you'll have much greater profits. And not only that, but when we do start to see a reversal, you know, rather than having to wait until we hit like 2.1k for you to be at break even, we're only going to have to move a few $100s and maybe even like $10-50, and then you'll already be at break even. So it's very important to have a good DCA strategy and a good capital efficiency strategy as well. We also need to take a look at the ETF inflows and outflows. So you can see right here, we'll take a look at the left chart in just a sec, but on the right you can see we've actually been having a lot of outflows. Now in comparison to the inflows that we had, it's very minimal. You know, these are all the inflows, all the green, and they are huge. We've been getting like 100k ETH buys, which is, you know, 100k times the price of that, which was like 3k, 3.2k. So it's going to be huge. I don't want to do the maths because I'm terrible at it, but you know, huge numbers, like in the nearly hundreds of millions probably. So very large accumulations, inflows, and compared to the outflows, it's very you know, minimal. The outflows have been in the 10 to 20, max 30 range. We were actually getting more outflows during 2024 right here. You can see we sort of topped out here on the outflows. So all these recent outflows have been very minimal. I think it's just a lot of institutional investors that are just selling off because, again, nobody likes the uncertainty in the markets, and this happens the same in stocks. So when one momentum stock falls, what a lot of these institutional traders and hedge funds will do is sell off all of their momentum stocks. That way, you know, because when one stock falls, all stocks fall, and it's the same with crypto. When, you know, Bitcoin falls, all cryptos are going to fall. So they're just going to sell off all the rest of their positions, allow the market to fall, buy back, and then just ride the profits, which, you know, granted, it can be a good strategy, but it's also quite difficult to do because what if the market reverses instantaneously? So yeah, that's what is essentially happening. They're going to be buying back, and again, it's nothing major. You know, this is 0.01% probably of their assets under management that they're selling off. If we compare it to the buys, you can see it's like 10 times times larger the inflow. On the left here, you can see the most recent outflow was 3 days ago at the time of making the video, with Fidelity, which sold off roughly $12 million worth of ETH. Nothing major. I think Fidelity is, managing like 5 trillion assets under management. So yeah, 12 million is not even a drop in the bucket for them. It's, practically a reflection. It's very, very small. So nothing major on the ETF inflows or outflows. When we start getting more inflows though, that's when you'll start to see ETH really, pump up. But I don't think that will happen until the market gets in a better state. We have, tariffs resolved more so. We have the war resolved more so. And yeah, until that happens, the market will continue to dip. We also have to take a look at the liquidation heat map though. So the liquidation heat map essentially shows us where there is the most positions. If we have liquidations, which are essentially these lines that you see here, yellow being the biggest liquidations, which is currently at 18 million for the 24-hour chart. Each line that you see above the candles is essentially a short position that has entered the market, and when we reach this price, these short positions will get liquidated. All the lines you see underneath the candles are longs and buy positions. So these will usually act as magnets and will provide liquidity for the market. When we reach these liquidations, we liquidate those positions, force them to buy back or sell back, and then that will provide enough liquidity for bigger investors, bigger traders to invest in and move the market in either direction. Now we have a lot, well, I say a lot, it's $18 million worth, nothing major. There is not actually a lot of liquidations on ETH right now on the 48-hour, the 1 hour, the 1 week, the 1 day, 3 month either. So this is practically all we have, and it's at $21.50, which isn't a lot. It's like a $25 difference right now. So it honestly will not make a huge difference. We're probably going to hit $21.50 today, play those liquidations, and then watch how the S&P opens in order to see how the market will move. Yeah, the S&P saw a good bounce last week from this support area. We talked about this being probably the low on the S&P where it should see a bounce. It has seen, well, again, this week we'll see whether we dump through. Next support we have here is at 5.6k. The one lower is 5.4k, which would be a very, very steep drop. So yeah, we're just gonna have to wait and see how that reacts. And the main thing right now is the entire market is just based purely off of news. All of these technicals right now have no real standing basis. We're just sort of estimating how far we could fall to, but until the market is fully resolved, we are going to keep on falling. So if this week we fall to 1.5k and the issues still aren't resolved, we're going to have to take another look, probably analyze where we could fall to, whether that be 1.4k, 1.1k, $900. It's all just varying factors, but these levels are just essentially good areas to DCA out, where we should see some slowdown in the drop and the best possible chance for a reversal if the market does come back to a better state. But it isn't in the best state right now, and yeah, that's why we're essentially dipping so much. But once it is all resolved and we start getting more news, more ETF filings, the crypto reserve actually happening, the reserve actually buying up the coins, more institutions investing, as long as all that news comes after the market comes into a better state, we'll see another bull run essentially, hopefully this year. Yeah, that's what we have to look forward to. Now, if you did enjoy the video, please do make sure to like and subscribe. Again, if you want to be copying my trades, copying my strategies, everything like that, then check out the Discord down below. You need a place to buy, sell, or trade cryptocurrency for the lowest fees with the best sign up rewards, then check out all the exchanges we're working with down below. Also, when you use my links to sign up, you'll get some cheaper fees and some nice sign up bonuses. Thank you all for watching. I'll see you all tomorrow. Goodbye, guys.